So welcome to today's weekly charting analysis webinar with myself, Jasper Lawler, Chief Market Analyst here at LCG. It's the 2nd of May. We've obviously had the Monday bank holiday, so the trading week really kind of kicking into gear as of today. Most of Europe was closed yesterday. I'm sure a lot of you were enjoying your Monday rather than working. But now we're trading again, so we're going to have a look at what's happening in markets. Normal format here is that I'll cover some of these sort of key topics that I think are driving markets at the moment, and then the bulk of the webinar will be going through some of the price charts, looking at the relative value of the various currencies, commodities and indices that we trade at LCG. Any questions, anytime, just shoot them through to the chat box or the question and answers area, and I'll endeavour to try and answer them. So I think you've all had a chance to look at the risk warning on the screen. These are, for those who have attended before, what I try and break things down into what's driving the market is the big themes, which people kind of dip in and out of, and these big themes, they tend to sort of be very much in everyone's mind and then kind of fade to the background a bit, and that kind of foreground, background move in people's minds can have a large part in terms of the overall direction of the market, but also where the corrections take place as well. I've added in there the UK general election. It's a 1-month countdown now until June 8th when we get yet another election here in the UK. So that's going to be quite a big one in currency markets, obviously, the British pound specifically, but also the kind of relative attractiveness of the euro and the dollar going to be affected by that UK election as well, and obviously it's extra important because of Brexit, and if there is any kind of economic fallout from that, then other currencies, other markets are affected. And on that point, London is one of the world's biggest financial capitals. Big European international banks hold large derivative books in London. So we're talking about derivatives. Obviously what you're trading here, CFDs and spread betting are forms of derivative pricing derived from other products, but there's absolute mountains of derivative products trade just by institutional investors, and literally trillions of dollars worth, and if that all gets kind of separated around into different financial centers, that could have large disruptive effects on every market. So the UK election has kind of a series of possible implications for markets. So it's worth watching. Other themes we're all quite familiar with at this point. This week specifically, on Sunday, we've got the second round of the French election. No one's worried about it at the moment. French stocks hit 6-year highs last week. The euro's rebounding quite nicely. It's falling off a bit today against the pound particularly. I think it's more of a kind of pound strength story. But overall, the euro looking quite strong. No one's too worried about this result. Looks like Macron is a shoo-in, Le Pen not. But I think just because Le Pen didn't win, obviously, markets for our sakes will probably be able to move on. But you can't doubt the rise in populist nationalist candidates here, because she's close to winning it. She's got a chance of winning, and she's representing the National Front, which is really quite an amazing turn of events. So this is certainly not the end of nationalism, populism. It's just building in strength, and it just hasn't quite got to the stage of really winning a major European election yet. Obviously it did in the US, and arguably Brexit as a result of it in the UK. We'll see how the Conservatives fare in the UK election. Interesting, yesterday, probably one of the things that turned up was a bit of a surprise, was an interview that Donald Trump gave, I believe, with the Wall Street Journal, talking about breaking up the big banks. So that obviously has large implications for the bank stocks, particularly US big banks, Citigroup and the likes, JP Chase. Those shares have been doing really well off the idea of Trump reflating the economy and interest rates rising. So there may be cause for concern there. And of course we've got the Fed meeting, so there's no press conference this week, so I think the market's pricing about a 5% chance that they lift rates. It would be a major shocker if they actually did something here. So this is more about reading through the small changes in the statement to get a feeling as to whether June is likely for a lift-off or not. As you know, I think as normal, the Fed will try to be positive but leave the options open. I don't think they're going to give any really overt hint about June, so it's going to be more about where the market's positioned come into the meeting as to where the dollar actually finishes the day, higher or lower. You know, if anything, you could say that the GDP print last week was pretty soft, and so you know, if the economy's stalling out a bit based on Q1 growth data, then maybe not the time for the Fed to get super aggressive. They want to leave the options on the table. Maybe they give it a miss in June. Maybe they hike rates again later in the year when they have a bit more clarity on economic growth. So there probably isn't going to be a lot to be learned from this Fed meeting, to be honest. And I think that's why the bigger deal may be non-farm payrolls, because we had a big disappointment in payrolls in March. So we're looking for a bit of a rebound in April. And that could be the kind of bigger telltale sign as to how confident the Fed will be in lifting rates in June. Okay, moving swiftly on. Let's have a look. I had a note from saying that the video okay but no audio. I assume everyone can hear the audio at this point. I didn't actually do an audio check at the start. So I would assume someone had sent a message if you can't hear me, because you can see me moving my lips around. Right. Okay. So the way I'm going to do this today, I tend to change the way that I do. Change the way I have the layouts in my trading platform from time to time, and kind of forgot that I had. But what I'm doing at the moment is I'm using 3 instances of the trading platform in order to have a sort of more like a, you know, so you can see a few charts at a time, but the screen's not too scrunched up. So I'm basically using this this multi-chart mode just to keep a few charts on the screen but not have it too scrunched up, so sort of just separating it out by asset class. So just having the 2 crude markets and gold on this screen, you know, having the indices and the FX as well. So actually, and then if you didn't know, you can switch the color theme, keep it consistent there. So that's a little tip if you want to try that one in terms of using the LCG trader platform. So I'm going to start, the general format here is that I start with indices. So maybe move that tab to there, switch to currency, then commodities. But like I said, any particular market you want me to cover, or you know, strategy or setup that you're looking at, you know, please let me know. So you know, the general theme, some more than others at the moment, is that we're in a bit of a kind of correction phase. So if we take a look at the daily chart for Wall Street, for the Dow Jones, it's notable that last week and yesterday indeed the Nasdaq hit a fresh record high, but the S&P 500 and the Dow didn't. So the one I've got on the screen here is Wall Street representing the Dow. And you can see that we've basically kind of stuttered out at this previous high here, and we're pulling back. Now we had a big kind of jolt off the lows here and had a bit of a kind of gap higher according to the LCG charts, at least through these MAs. So there's a chance we go back down to fill the gap first, and given that we're in more of a sort of range bound environment, that's more likely than normal. You know, if we were just in a you know, strong trending environment, you know, it's not at that point you expect a full pullback here, but we haven't taken out the highs basically. So the chance of a deeper pullback is stronger than it would be were we up here and trading and making consistently higher highs. So I'm a little cautious on trading this small pullback, although it's a very it's a very bullish market at the moment. I still tend to prefer to be on the long side of it because of the uptrend. I don't see any particular evidence yet that we've topped out in Wall Street, but we are in a bit of a range. So there's a chance for me that we pull back to these MAs on the daily chart. So this is the 20 and the 50 in quite close vicinity, down near this kind of gap high that we saw last week. I believe this gap was just the French election gap, and we kind of see similar ones here on the Germany 30, and indeed I've got I'm on a shorter time frame here on the UK 100, but it's I think it had a similar move, not as easy to see. So I think that's the general thought process here. So maybe a pullback to this previous range, and there's just basically a combination of support in and around that area that looks to me a bit more of an attractive entry point than here. We have to we have to be prepared to change our minds, obviously, and if we get a push through this old peak here and get a close through here, maybe even intraday, then then it looks like that correction has ended a bit sooner than we thought. But this doesn't look like a very high value place to buy, and again, I'm a bit cautious about selling. But obviously, if you are a bit more two-way in markets, then maybe a sell down to this this old resistance along here in between those two MAs. Now, the Germany 30 outperformed US markets last week because this is what I was highlighting from the week ahead video, which I recommend you watch. Is that we broke into record high territory up here, and again we're just kind of consolidating. If anything, a slightly higher chance that this consolidation doesn't dip any further, but again we've got a potential gap we'd want to fill down here first. Record highs, obviously it's basically a battle between those who are buying the breakout and those who are selling on the fact that we've reached an old high and taking profit at resistance. So quite a clear-cut range here. It's again pretty hard to see before it happens. It's the kind of, I guess, the variation in the strategy that you can have here is to believe, if you believe this range will be enough to determine a decent breakout, then you basically you buy at the bottom of the range anticipating a higher breakout, sell at the top of the range anticipating a deeper correction, or just wait for an intraday close above. For me, you'd want to be where this original high was, and where you see these highs through here, so about 12,483 and then 12,409, which was the old record high here, which is what we've been bouncing along in terms of the price. But always kind of keeping in mind that the trend is pretty overwhelmingly higher in these indices, and I think a good place to kind of see that is that in the UK 100, where we had the UK election was announced, obviously, and we dropped down to that old support that we mentioned in the week ahead video a couple of weeks back. We've got a nice rebound off that support, but now we've come back into this old confluence of old support turned resistance, dropped back a bit, but nonetheless, if we pull down to, I think it was the 1 hour chart I was looking at, maybe the 4 hour, you can kind of see that that was quite a solid area of resistance there, but we haven't really sold off with any force, and we've basically held along this moving average, and we popped up here again, and obviously a bit of indecision again at that resistance, but it sort of looked like the market wants to move higher and hasn't really aggressively sold off. So again, it's just an example of how these indices are all pretty much still trekking higher. As a sort of bit of a guideline here, if we take this kind of channel, or at least just this trend line from the low in the S&P 500, we can do something like just kind of use a bit of a use maybe a conservative bottom like that, and then project it from where the price broke out, you could say that we've still got a decent amount of upside if this was a kind of flag or you know, rectangle or you know, any kind of trading pattern along here with a depth of about that much, then you could expect us to head up towards 2400. So there may still be a little bit more upside on these indices. So moving swiftly across to currencies. I did note at the start there that we're getting a bit of a rebound in the pound, and noticeably here in euro sterling, which is not something I always cover, but it's just come off a very notable support here. So if I zoom out to our daily chart, you know, obviously what I'm talking about here is, you know, this low here. We've got the strong rebound with the gap up. That I believe was on the French election day. We pulled back in, covered that gap. And now we're on, you know, if I drop down to the short-term chart, you can sort of see that we try to pop through this high here, and at the moment we're, you know, we failed, popped above, and had a bit of a reversal, and we're slumping back beneath this resistance now. And if this could end up being a little false breakout here with a turn to the downside, if we do finish this short-term candle in this vicinity, it's basically a failed breakout, which would imply that maybe there's a bit more downside, perhaps down to these lows or perhaps down to these lows down here. In terms of, you know, what is the overall trend that we want to be going with here, it's not clear. You know, we're in a longer-term range. We've been in quite a heavy downtrend. You know, this looked like it might be the beginnings of the reversal of the downtrend. It still could be, but maybe we need another test of the lows before it can properly reverse. You know, I've highlighted here how the momentum has shifted, but that's not to say we can't dip down again. So some short-term softness here could provide either an opportunity for a short-term sell if the market ends like it is, or perhaps just a better entry point to capitalize on this potential reversal to the upside off these lows, off this major support down here. Okay. So the situation with the euro and with cable is quite similar, in that we're basically just probing this, you know, these significant resistance areas. So it's really 109 with euro dollar, and we've been in an interesting range here. It's been a sort of 100 pips up and down every day. It's tighter range yesterday because, you know, no one was around. So again, it's going to be a matter really of, you know, which way do we eventually break out of this trading range. It's, you know, it's either on the top side here or down here. My sense in this sort of scenario is that if we haven't been able to sell off from such a significant resistance so far, it leads me to think that actually the breakout will eventually take place and be sustained to the top side. So my bias is for an upper break here, also based on the fact that, you know, this is our fourth time of being really in this resistance. You know, if we talk about 1, 2, 3, this is number 4 for the euro to try and get higher. And you know, the fact that on the previous occasions it kind of dumped pretty quickly, you know, here we're consolidating, makes me think that maybe, it's not to say we can't flush down a little bit lower first, but I feel like we are eventually going to push up to 110 and potentially beyond. Dollar yen we've had categorized as a downtrend for a while, but you know, this correction higher definitely got more legs than I was suspecting. I thought this might be the end of it here when we had this gravestone doji, a dragonfly doji rather, at the peak, at the old resistance here. But this was, if I can zoom out the chart, you know, this sort of 111.60, which we were talking about in the last few webinars, I think, held as resistance once, 2, 3 times even, you could argue, and then this, you know, tried it for a 4th time, and now we're above it. To me, this is significant, and you know, we've had quite a decent run up here, so it's tricky to buy, but I think the fact that we're above this area is sort of changing the outlook for dollar yen a bit. I think we could have a bit more topside from here, and we could even be looking at another test of 115. So I think probably the idea here is, you know, waiting for a decent pullback to kind of retest these lows a bit to actually confirm that some sort of bottom is in, and then looking for a move up potentially to that 115 area. At the moment we're getting a breakout, so, you know, shorter term, you know, we're breaking out to the top side. It's just that the moving averages are not really aligned at the moment. It's a bit of an overextended correction within the downtrend for me at the moment. So with cable, we've broken out the top of the range. We're pulling back here, and you can see that actually, you know, there's a chance still that this breakout fails. But again, sort of similar to the euro, I'm on the side leaning towards thinking that this breakout has legs. If there are some change in the polls for the UK election, you know, that could weigh on the pound a bit. But we even had over the weekend, you know, this talk of a disastrous meeting between Juncker from the EU and Prime Minister May, but even that hasn't really worried sterling traders. So, you know, that's a positive reaction in the face of, you know, debatable but still negative news. And so I think that's a good sign that we can continue this trend higher. But again, you know, it's another one of those where, you know, we've been moving quite sharply higher for a while, but we're above a big area of resistance. So, you know, you'd have to just put faith in the trend at this point continuing. So I'm just going to finish with the commodities here. So typically I'd like to focus on Brent, but actually I think the way US crude is lining up at the moment is a bit more interesting. So this is a 1 hour chart, so you can see here that what I'm looking at is the retracement of this bounce. So we had this bounce off the low, and then we pulled back to the 76.4 quite nicely on 2 occasions. Now we're moving to the top side. Well, why is that interesting? Simply because, you know, we've got a kind of, you know, it's debatable at this point, but if you connect this original low with these 2 lows here, you know, this would be, you can't see it too well, but if I move that out of the way, you can see we had a nice bounce there after quite a sustained sell-off. So there's a chance that that reaction of this trend line was putting me in the bottom. So we had a lower risk entry down here at that 76.4% fib, and the market's kind of jumping off these lows. So a good chance to my mind that we at least get up and you know, retest these peaks here, which is around the 50 mark. You know, maybe we get another pullback from there, but you know, probably a good chance that, you know, that's basically what we've been doing recently. You know, it's been just sharp moves up and down. So there's a good chance that this down moves over and we're moving again to the top side. Why would that be? Well, the reason we got this spike last week off the lows was when there's some rumors came out that OPEC might pre-announce ahead of the May 25th meeting that they're going to extend the output cuts. So that prospect of an early announcement and a bit more positive feeling that the output cuts could get extended is why actually oil could have a little session of pushing to the top side. And then if we switch gears to gold, I've been talking about this 1260 sorry for a while. We gave that up yesterday, and to me that's quite a bearish development for gold. I think we probably are pushing down to this support here in the 1240 vicinity, and then, you know, maybe some, you know, that is quite a significant support you know, would be, you know, below this 50-day MA, start getting a bit oversold in that area. So we'll have to reassess the market then. I'm still overall positive in gold, but I just think that the fact that this resistance held for a while now, we're below it, is perhaps a reason to think that maybe gold is due a bigger sell-off down here. Because of this North Korea stuff, you know, you know, obviously it's a worry, the US taking on a nuclear power, but it's probably going to, you would imagine, it's probably going to get de-escalated, and the dollar's looking quite strong against the yen. So if you look at dollar yen moving higher, it typically correlates with gold moving lower. So I think I'm going to wrap it up there. We've hit 1 o'clock. I was a little bit late starting, but a little bit late finishing. Hope that was useful to everyone. If there are any extra questions about these webinars, feel free to contact customer support, and there will be a recording of this on YouTube updated later, should you want to have a quick rewatch of some of this. All right, thank you very much, guys. Good luck trading this week. Jasper signing out.